Hello, everyone. My name is Igor Tomych. I'm CEO of DashDevs, and today I would like to have an episode with Noah Buchman. Hello, Noah. I would like to introduce you first for our audience. So, Noah is a co-founder and the CEO of the Propel Bank. So, please tell us your background.
As Igor mentioned, my name is Noah Buchman. I co-founded the fintech Propel Holdings. It's a publicly traded company that focuses on a new world of financial opportunity. It's for the underserved consumer. And as mentioned, we recently launched Propel Bank, which I also serve as president of. And pleasure to speak with you today.
It's really interesting topic, and I think it's a unique ability for us to dive deep more into the banking layers because, as we all know, there is no fintech projects which are not served by banking as a service. And I think you're in quite unique position by opening the bank. You have the holding company, but then you pursued and achieved the banking license, which is really interesting story. So I would like maybe to start with the first question: what were the triggers and motivation to pursue the full banking license? Because I haven't seen a lot of fintechs going this way.
Absolutely. And I think what's important is the history in order to get there. You can't we're 15 years into the journey and many decades still to go. And this was it was a point in time. It was part of the continuous evolution of Propel Holdings. And I can speak specifically why we went for the banking license, as you mentioned, and also why it took 15 years to get there. I think we should start at the beginning. And the beginning was the identification of a need, a global need. And that is tier one financial institutions, big banks for the most part, do not provide the right product and services for between 40 and 50% of an adult population in the developed world. And we are based in Canada. We operate here in Canada. We operate our largest market in the United States, and we also operate in the UK. And we will be in other countries and jurisdictions in the future. And we've identified that there is a global need where what we'll refer to as the underserved population, so people who aren't receiving their credit needs from tier one institutions around the world. And how could we solve for that? 40 to 50% of the population falls into this category, as mentioned. So it's a huge issue. It's a huge need. And we established the company with the mission that everybody deserves fair and responsible access to credit. And all of our strategic decisions, all of our partnerships are centered around credit inclusion. And this is the foundation that eventually we'll get into why we decided to launch Propel Bank. We have a plethora of structures in order to continue our growth pattern. So we have direct to consumer portfolios. We then expanded on our fintech platform. So we have an AI powered fintech platform that makes better decisions. And what I mean by better decisions, it allows for people where tier one banks will say no, we find the right reasons to say yes. So we've been doing AI before AI was a buzzword or a sexy topic as it is today. We've started developing our own algorithms. We've got and leaned into heavily on machine learning, and that has allowed us to develop credit models that find reasons to say yes. We've also have it incorporated into our platform for automation. We're looking at about 70,000 unique applications per day, but we don't stop there. There's much more people who need fair and responsible access to credit. So we've developed a whole host of partnerships. We have banks who believe in the same mission of credit inclusion, who also want a best-in-class experience, and we have our fifth bank launching on our platform in the US coming here in Q1 of 2026. And we offer a suite of services. And those suite of services as a fintech start with acquiring the customer and customer acquisition. There's risk and response models. There's the loan management system. There's data management, product and analytics, asset management, operations, full servicing, which includes from originations to customer service and recoveries, as well as the data storage and transfer, forward flow structures, et cetera, the full cycle for an online consumer lending program. That took us to a certain level, which continues to grow at an outsized clip from a growth perspective as a company, but it didn't complete what we were looking to do as a company. And especially in the United States and other places around the world, there are permissions given to banks and there are particular permissions given to non-bank entities. And up until now, we've operated as a non-bank entity. By looking at the path for how we could further stay true to our mission and ensure more people are included with fair and responsible credit products and services. We decided that in order to be as complete as possible and in the right compliant way, we established a subsidiary, a wholly owned subsidiary of the parent company, Propel Holdings, and launched Propel Bank. We spent a few years actually researching what the right structure was. And there has been IFE, which is called an International Financial Entity Structure, that's been around for over 40 years. It's regulated by the OCFI, which is the financial regulator out of Puerto Rico. Puerto Rico is to the US dual banking system. And we spent a couple years working with them, going through the rigorous process, which was heavily focused on safety and soundness and compliance in order to be granted an IFE, which has the banking license that allows us to expand throughout the business of banking. And we are very committed to our bank lending partners. As mentioned, we'll be launching our fifth this quarter. And the bank, Propel Bank, is set up to provide services to other banks. It also further allows us, with permissions from regulatory permissions as a regulated banking entity, to expand product and services for the needs of the underserved consumer. And what's also unique is that the IFE charter, so the banking license that we have under the IFE structure, does not require us to convert Propel Holdings, which is the publicly traded parent company, into a bank holding company. The structure is also recognized as a foreign bank, both in our current markets and other markets around. So with regulatory approval in other jurisdictions, we can open up, whether it's an agency office, a branch location, a type of office, again, depending on the jurisdiction, and have an established presence as a bank in those markets, further allowing reach in order to provide the right product and services to those who are not having their needs met today. And that's where we are today in our 15-year journey, and we will continue to evolve. In our view, it's the latest evolution in bank fintech partnerships. So part of the quote or saying that we have, it's a fully regulated bank that's powered by fintech. And we think that combination of the rigor of being a bank and what's made available structurally to a bank, paired and married with a large fintech, is a superior offering in the market and also a real competitive advantage, and creates a massive regulatory moat, strategic moat, that is, versus anyone else, because you can't just spin up and get a banking license. And as you alluded to in the opening, it is quite unique, and it really helps us further support the partnerships that we have on our platform and allows for tremendous growth and expansion into the future.
That's definitely amazing results. And I know that there is no such thing as overnight success. Usually all the results that people acknowledge and they say, okay, that's something that never existed before. And we see that something becomes really successful. It's not happening in one night. And I think that's what you told us today is definitely the example when you take in decades of experience in converting into the proper structure, proper compliance process, and then even proper legal structure to enable the ability for the customer to benefit from the financial services. And I have a lot of questions out of there. So maybe the first one, because recently I heard that for some fintechs, the way to come to United States market is through the Puerto Rico. And for us, it's pretty interesting what were the decision process, because if you're applying for a banking license in the United States, it's pretty heavy lifting process. So what was the decision making for the location?
Touch on your last point. You're absolutely right. We've been doing this now for 15 years. We've built it as a going concern, and we continue to iterate and evolve. And this latest part of this point in time, and we're speaking because it's a wonderful milestone. It's a wonderful milestone for the company, but it's also a wonderful milestone that will allow more people to be included in financial products and services that are excluded today. And we're a company based in Canada. Our head office for Propel Holdings is in Toronto, and we're listed on the TSX. And the United States is obviously a different country. So again, for us, it was a process. The evolution in order to get there, touching on your original point, was an evolution and was a process. We didn't just go and be able to launch a bank. We've been in the United States actually since we launched the company in 2011. And how that started was we had established US-based entities, non-bank entities, and we obtained licenses in a number of states, and we began as a state licensed lender. And we had an operating brand that did that. And we operated on that model, ensuring full compliance, building out our entire internal ecosystem, partnerships integration as we built that AI-powered fintech platform, which is what Propel Holdings is today. And that went into 2019. And in 2019, we evolved further, call it as the next step, in order to expand on our mission. And we had our first bank program. So a bank lending partner utilized our core services so that they could offer online consumer lending to their customers and continue to grow. And they would enter into a fintech bank partnership with us and allow those services to, be powered by us, but them as the lender, as the bank lender, and expand throughout the United States. And we did that, and they're still with us today. It's an incredibly successful program. And then we continue to do that with more banks along the way. So we built up also a track record in working with our bank lending partners and the ability to understand audits from the FDIC, state banking commissioners. We also have nationally chartered banks on our platform, so also working and understanding the OCC, so the main bank regulators in the United States. And we always have a clean bill of health, compliance first over and above everything, and ensuring that we also are treating our customers with the utmost respect and devotion, which we have been doing for 15 years and will never waver from that. So that was a process that, going back 2 years now, that we had, so the time would have been 13 years of that type of experience and working in the United States, again, with the right legal and tax structures, and also working with federally chartered and state chartered banks. And then after that, as the next step, when we said, in order to further grow this business, in order to include more people with fair and responsible credit products, we can expand further if we were also the bank and provided services to our banks, but as a banking entity. And after that long track record, we then did our research and we found that the international financially, or the IFE structure, fit our particular needs for what we were looking to accomplish strategically as a business the best. As I previously mentioned, IFEs have been around for 40 years. They're very well respected, regarded, and understood throughout the banking world. Countries, Canada, the UK, those are other two markets, many others recognize the IFE structures as well. And again, the public entity Propel Holdings did not need to convert into a bank holding company. We could structure it the way we wanted, and we could then continue to expand. So the fact that the OCFI, which is, again, as mentioned, the regulator there, is part and works hand in hand with other banking regulators, made sense for us. It's our first presence in the United States. Obviously, Puerto Rico is part of the United States, but it wasn't for us to be as an entrance into the US market. We had already been there for 15 years. It was the right regulatory framework for us to establish Propel Bank. And it was a 2-year process working with them, many meetings at the regulator's office in San Juan. And we ensured that this was set up right from the start, and that we were going to add value. We were going to build and invest on the island, which we have done and will gladly continue to do. It's been a tremendous experience so far, but we're working exceptionally hard. And it allows us, again, the same type of access necessary as a bank throughout the United States and beyond. And that's the stage that we're at this point in time.
So that's definitely the takeaway that I'm already doing for this podcast, because I know, and that's from our experience as DashDevs and from other companies that we talk through, you cannot do those things out of nothing. Like, you should have a previous experience. And what you explained, that working with the local market, having an ability to work with a state charter account, and having an experience and understanding the need of the market, form this really good vision, what you actually need, and is it possible to have their own banking license, and how it should be structured from the business perspective. So it's definitely the takeaway and key learning moment. If you think that you can jump from 0 to 10 without proper knowledge and proper experience on the market, usually it's really hard. Sometimes you need to spend certain time working on the business model, understanding how it functions, what are the possibilities on the market, and then enhance it and evolutionize it, if I can say. And in this case, I would like to maybe focus on another area, how licensing unlocks the ecosystem compared to the partners. You mentioned that you worked. Maybe we can focus a little bit more, because what do you think from your perspective right now, having the proper license in Puerto Rico, and not just utilizing yourself, but also providing to the third parties as a banking infrastructure? What do you think the difference is, like key points that you can highlight to our viewers?
Licensing is a huge area. As a non-bank entity before launching Propel Bank, we were managing in excess of 200 different types of licenses for all the types of services that we provide. There's, again, depending if we're going to focus specifically on the United States here, States have a lot of power. That is the design of the United States. And some states have similarities. Some states mirror their legislation, and some states have entirely their own unique legislation in a whole host of areas. And that's a critical piece to manage. We have servicing licenses, we have collection licenses, there's marketing, there's a whole host depending on what our offering is in that state. Some states we have where we're allowed to provide services as a non-bank, and we can also touch the receivables in a program. So in some of our programs, the economic interest in a receivable will come onto our balance sheet. In some states, you can't provide services and earn off the receivable. So we don't have that structure in those states. And that is what gave rise to our lending as a service offering, where we just provide services to other banks and we forward flow the economic interest in the receivable to third parties. So it's a managing of a whole host of different types of licenses. Banks in the United States do not have the same licensing restrictions. This is a general comment. There's obviously nuances and a bit differences depending on the type of the state, but as a general statement, banks do not, or a better way of putting it, for the most part, are exempt in most states from having certain types of licenses. A lot of the licenses we would have as a non-bank fintech would fall into that category. Again, it's not 100%, and we take a compliance first approach for what's right in each state and how the legislation is written. However, generally, a bank is exempt. And what that does, it provides a host of efficiencies in how we're able to scale. It provides the ability for us to grow in new jurisdictions over and above where we're today. And all of that stays true to our mission of credit inclusion. If we're not able to operate everywhere, that means there are people that are excluded from receiving fair and responsible credit from tier one financial institutions. So establishing the right compliant and legal framework and being a regulated banking entity allows Propel Holdings through Propel Bank to further that mission and ensure people have that fair and responsible access to credit. And you can't expand fully. You can on a restricted level as a non-bank, but once you've are regulated as a bank, which comes with a host of different type of oversight than a non-bank entity, there's comfort in those states for having those types of licensing exemptions. And we can then further offer the services to our other bank partners. As a bank today, which just recently went live, we are not a consumer lender. We only provide services to other banks. And there's, as mentioned before, there are servicing type of licenses or exemptions for services that we as the entity have in a particular state. And our bank partners, the fifth coming on, who do offer credit products from their states, either as a state chartered bank or as a nationally chartered bank, they offer consumer credit products in those states. We just provide services. So in tomorrow's world, as the bank begins to be established and rolled out, it will be bank to bank. You'll have a regulated FDIC or OCC chartered or an ILC chartered bank providing credit products in a state, and then you will have Propel Bank providing the services to those banks for customers in those markets. That same concept, again, depending on the jurisdiction, is applicable in other areas as well. And again, we have global expansions, and this structure and why we went specifically with Puerto Rico allows us, again, it's Propel Global Bank. It allows us to expand globally as well, and that will definitely be part of our strategic roadmap.
Thank you for quite detailed explanation. I think everyone will benefit with the understanding and proper visibility here. And quite an interesting point, because you mentioned the collaboration between state charter banks and your institution. And I think, like, if you take a look, a decade ago, it was more saying how the tier one banks competing against the fintechs. But what you're describing feels more as a collaboration and benefiting from infrastructure. And is this something that you put into the acquiring the license? Because when you are not licensed institution, you're heavily relying on the ecosystem and partners. But in your case, it seems that you're powering up the market with the providing banking service to charter banks, and you are actually building the infrastructure. So it becomes kind of the base ground of infrastructure providing to other financial, not financial institution to have better products for underserved people.
You hit the nail on the head, Igor. Absolutely. We have partnerships, not just with banks, but we have partnerships with neobanks or challenger banks and other companies as well. And ultimately, at the end of the day, they have banks that sit behind them, but they are experts in their areas. And we are experts in our areas. And if we find the right foundation, and for us, any partnership that we enter into has to be rooted in our mission of credit inclusion, and it has to move the consumer along, and they have an expertise that could be in their brand and their customer acquisition, and to have a suite of digital banking products, even if they're not a regulated bank themselves, but they will then partner with us. And that is today has been exclusively around consumer credit. Unsecured consumer credit is the core area of expertise we provide on our AI powered platform, as well as our kind of world class technology. And that's been kind of tried, tested, and through numerous banks, and why we've continued to expand. To your point that you were alluding to within your summary and then question, the regulators look at that. They look at the history. They look at the partnerships. They look at our compliance structures. They look at the balance sheet of the business as well, before then obviously that all of that went into the ability to receive and be approved after a multi-year process for the banking license.
I know that's a level up in terms of the compliance, because when you're non-regulated, the structure and certain accountability is pushed to the license holders, although you have the license collection. But when you're providing the services, and especially financial services, to the third party, it's definitely another level. And I would like to jump maybe a little bit to another angle, because there is a lot of pros and cons. And the area that I would like to discuss is maybe the trade-offs involved by building the license bank and then providing the infrastructure to the third parties. Because if you're utilizing, let's even assume like you're a new bank and you're relying on someone licensed, you potentially go to Galileo or other third parties which can provide you the tech, and sometimes they can provide you the licensing umbrella. But what are the trade-offs you have to do while building the full banking license and investing into the technology? Because that's another hidden part. It's not just the licensing and compliance process. There is a lot of work from the technology side involved. So can you maybe highlight and educate us what you have been doing in terms of the trade-offs and these technical parts?
We evaluated that. That was part of, as I mentioned, it was about a 4-year process. In the first 2 years was that type of evaluation, specifically around legal research and understanding what it would mean. And obviously, because what the result is, we concluded that the trade-offs are worth it. Of course, having a banking regulator overseeing all of your activities, naturally by definition, would require trade-offs than before when you had it. But it stayed true to our mission, and the opportunities that provided, not just for the company, but for the underserved consumer, ultimately allowed us to conclude that it's worth it. One of the main areas to look at, that if you want to drill down, or what's the net of all of that, is you have a business plan. If you are a non-bank, you have a lot more flexibility to kind of do as you please. As a regulated banking entity, you have a banking regulator that is now a partner. And you can't just do everything and anything you want to do. You have to ensure that your regulator is comfortable with new partnership and expansion, offering different products or services. And you work with them as a partnership. And their main focus is obviously consumer protection, safety, and soundness, and that the bank will be a going concern. And we've now started that journey with our regulator. They have been tremendous and supportive thus far in going through the process. But you have to understand that it's similar to, I guess, one of the simplest fun analogies I'll give is if you're a teenager or young adult and you're single and you have plans you can do, kind of live your life so far as you please, but then you get married. And if you choose to get married, your life has a difference. And there's 100% the argument to make. It could be for the better. And you're in a marriage. So a marriage now means there's somebody else to consider. And if you have children, there's even others to consider now for the type of decisions that you make, how you go about them, how you live your life. Same thing here. You've now entered into a different stage of the company, or a different stage of life. You have other considerations. You have other partners, in this case, a regulator, and so forth, to consider. And you make those decisions as a team for how you're going to build out the life of the company on a go-forward basis. And it's a similar trade-off that people make in their personal lives to the trade-offs you make here as a business. Assessment, having another person, an entity, a regulator at the table with us for the greater good was worth it. We had best-in-class infrastructure, technology, and compliance program. If we didn't, we would not have been approved as well. But there are new layers over and above. So Just like when we made the decision to become a public company in 2021, that came with additional oversight as well. Also, you now have obviously public shareholders. There's different sets of compliance, things we can say or not say as a public company that we need to be mindful of in what we release. You can't just talk about a business or the future, especially if you have material non-public information. That's a whole new world. That was also a type of trade-off, again, for the greater good that it could expand on our mission as a company. Same thing here as the next step of becoming a bank and having it as a wholly owned subsidiary as well. So you do have a lot of additional costs, especially to set up a bank entity. There's a huge paid-in capital requirement. Even though, again, we had best-in-class compliance systems, there are still additional layers over and above. But those are good things in our mind. Yes, it's additional cost, additional resources, more audits, et cetera, and a lot more that comes with it. But it's for the betterment of the consumer, and we're squarely focused on improvement, inclusion for the underserved consumer. So those are trade-offs, which are cost, time, resources, consideration, partnerships that we felt was damn worth it.
I would like maybe to add to your analogy. It's like playing on Premier League, because in this case, it's doesn't feel like a trade-off, it's a commitment, because more eyes on you, especially with the regulator, and building trust requires specific process to be in place, additional layers of the compliance, additional layers for the submission reporting to the regulator. So it's investment, and actually that's a trust that you confirm in through the following the policies and the frameworks in the specific regions, especially with the regulators. So I'm totally with you. I understand that it's definitely worth it, and it takes a lot of years of training, playing, and understanding that you have resources and the motivation to get there. So it's definitely there. So thank you for highlighting those trade-offs or commitments that you reached with this level of the licenses. And since we're approaching till the end of the episode, I'm usually asking the last question. What do you think I didn't ask you today? Because we discussed a lot of things, but maybe I something missed, and you would like to answer the question that you can ask yourself to our audience.
One of the areas that I guess we spent a lot of time on the why, a little bit on the how, and then maybe I would touch
Yeah.
a little bit on
Yeah, sure.
on the what, on the what is the bank, and what can it do? What can it do differently? Even though a lot of it was on abilities on licensing, right? There's a big part of the segment on that. Why we did it. We touched also on the how, but I'll speak on the what. And the what is expanding products and services in time in the business of banking. The what out of the gates and tying it back to the regulator. Today, Propel Bank provides services to other banks. So it is a bank built for banks, and it is just operating in our main market, the United States. Long term, as a long term growth, the what is we have the ability, again, with regulatory approval and partnership as a follow up, a segue from the last segment here, will be on further expansion into the business of banking. We now have the opportunity, the options available to us to offer suites of digital banking products to consumers, to other banks. Again, this is longer term strategic plans that we can offer in partnerships with our bank lending partners in those programs. It gives us the option to offer products outside of that as a standalone bank throughout the United States. And it also gives us the option to establish banking presence in other markets. And as we evaluate other markets, our global ambitions, as we've mentioned, and the name is Propel Global Bank for a reason, we can then ensure that if there is a need in additional markets outside of the United States, which we know that there are. Again, we're operational in Canada and the UK today, and we're going to not stop there. It's a global issue of credit inclusion. The bank itself in those markets can have additional partnerships. The bank itself can get into business of banking in other markets established as a foreign bank, and then working with that local country regulator or however that region is structured from a compliant way, we can further expand. So though it has its core areas today that it provides to our existing bank lending partners, again, Propel Bank nor Propel Holdings or any entity or any operating brand underneath is not a lender. We leave it to other banks. We just provide the services. We, over time, have the option and opportunity in order to expand within the business of banking. And then you have the what, that makes it much more fulsome for staying true to our mission of credit inclusion.
And while you've been describing what I came with another analogy. Everyone knows that AWS as a hosting was built as a need from Amazon itself. And that, in my vision, one of the best way to tackle the problem, because if you are doing something which resolve your issue, potentially there are a lot of other customers who have the similar problem and they're looking the best way to solve it. And it seems that the Propel Bank in Puerto Rico is the answer for certain businesses who are looking to have the banking as a service functionality, including the credit scoring. So my congratulations with that. And I think it gives a lot of insights and a lot of food for thought for our listeners and viewers. Thank you for this fruitful discussion. It was definitely a pleasure to go into details, listen this story of becoming the bank. Not everyone has this experience starting with a non-financial industry, providing the credit, collecting the portfolio with the different licenses and operating with the huge markets as United States, Canada, and United Kingdom, become a bank and then be the leading company for providing banking service for other banks. So it's a tremendous story. Thank you for sharing with us today.
Thank you, Igor. I appreciate the opportunity and great to chat with you today. Thank you again.
Thank you for all the listeners who did till the end. Please subscribe to our channel. Please follow us on the social networks. And we welcome to see you with our next episode. So see you.